Blane Markham, the Chief Trading Strategist here at Markham Trading, coming to you with my weekly market update, where I'm going to break down for you exactly what I'm seeing in the market, what our team is tracking, what I think you should also have your eyes on. So let's go ahead and hop right into our first chart here. So of course, as I'm sure many of you have seen, we've had some pretty nice price action here so far this week on this shortened week of trading. We did start the week lower, continuing to trade down in Monday's session, building on that selling that had occurred on Friday. But we've had a nice rebound here in the past couple of days, seeing this S&P actually close higher in 2 consecutive sessions. This is the first time that's happened, actually dating back until midway through March. And coming into this week, the setup certainly was that the index was oversold. You can see that we closed on Friday's session well below the lower Keltner channel here. You can see our 5-day RSI was way below the level of 30. It was actually all the way down below 20. So that's a very deeply oversold level. So, certainly stocks were due for a bit of a short-term bounce. We have gotten that now with the Tuesday and Wednesday trading sessions here. Of course, much of this gain has come on the back of headlines that began to break on Tuesday that there may be some willingness from the Iranian side to try and draw this war to a close sooner rather than later. So those headlines continue to give stocks a boost here in Wednesday's session, but ultimately towards the close, the price action suggests that investors are still a little bit cautious heading into the speech that's going to be delivered by President Trump to the nation later on this evening. I think it's very likely that the speech will serve as the next major market catalyst. Whether the price action be up or down, it's going to be largely dependent on what is shared during that speech. But again, just looking at the price action from today, if investors truly thought that the war was going to be completely wrapped up and all of the energy market disruptions were going to cease, and that was going to be the message that's going to be shared tonight, I think you would have seen a much stronger trading session. We did close up on the day, which is great. Of course, it's always great to see stocks in the green, but looking a little bit deeper into today's price action, you can still see that we have not broken this series of lower lows and lower highs quite yet that we've been making throughout March and so far into April. You can see in the price action on Wednesday, we traded up to the 20-day EMA, and that is actually where today's rally fizzled out. It's where this relief rally has begun to start losing steam, and you see that we didn't close anywhere near the highs of the session. We actually finished well off of the highs of the session and actually finished closer to the lows of the day rather than the highs. And so when I see price action like this, this tells me that we're likely to reverse lower here, at least in the short term. That is, of course, absent a major market catalyst, like some clarity about when exactly this war will actually end. And so while it has been very nice to see the market up the past 2 days, just what we're seeing here in the charts, we did trade up to almost exactly where you would think an oversold rally would kind of fizzle out at. It generally happens right around that 20-day EMA. That's exactly what happened in today's session. Also, too, our 200-day moving average here, that's our green line. You can see that we still have failed to recapture that level ever since breaking down below it midway through March. That is now serving as a very key level of overhead resistance. So we have a lot of overhead resistance above this market. We have not been able to clear it yet. We still haven't broken that series of lower lows and lower highs. And so with all these things lining up on the charts, the technicals are still telling me that we likely still have some chop, at least, if not some more downside to go before we start trading higher. And I've already mentioned the war in Iran several times because that is really the narrative that is driving this market right now. We do have a major labor report that's going to be delivered later on this week in the non-farm payrolls report. But right now, this market is almost solely and hyper fixated on the war in Iran and the disruptions that are occurring in global energy markets because of it. So that takes me to the next chart that we're going to look at right here, because I truly think this is one of the most important charts that any trader out there or investor could be watching right now. And this is one of the charts right here. It's, of course, the price of oil. This specifically is WTI crude. Of course, you can look at a chart of Brent that is more representative of overseas oil, but specifically here in the U.S., this is more related to U.S.-based oil, so it's a little bit more pertinent to our markets here in the U.S. And again, you can still see that the trend for oil has been overall higher, but of late there's been a very strong correlation between the price of crude oil and the price action of stocks. It's almost a perfect correlation. When you see oil up, of late, almost every single time, stock prices has also been down. So of course, when you've seen the reverse of that, like the past 2 days, you can see oil has marginally ticked down. Of course, stocks have been able to rally because you've seen some pressure come off in the oil markets. But nonetheless, we're still in this pattern of making a series of higher highs and higher lows in WTI crude. And even though it's been down the past 2 days, it really still has not lost all that much ground. It's pulled back from about 105 now to just marginally below 100. So it's still hanging right around that $100 level. Until we get some positive news out of the Strait of Hormuz, or we get some clarity about when this war is going to end, it does not seem likely that we're going to break this trend here in the short term, which is likely to keep pressure on stock prices. Now, with that said, this market is being very much driven by headlines. So, of course, we're having to keep a very close eye on the news as it's developing. Certainly, the speech that's going to happen tonight is going to be a major market catalyst, as I mentioned earlier. So, we're watching all of these things very closely because, of course, if we start to see some news move that makes the price of crude plummet and really start to drop, of course, that's going to have a major positive effect on stock prices. But right now, this is one of the most important charts that we're watching because even with all the headlines flying around, equity markets, they've been a little bit more whipsaw. They've been a little bit more volatile. They've traded a lot more actively off some of these conflicting headlines that we've seen in the past couple of weeks. Oil prices, on the other hand, have been a lot less volatile. Of course, they have certainly skyrocketed and soared in recent weeks, but they have remained much more closely linked to simply just supply and demand of the actual commodity. And thus far, little has been done to actually improve the situation with the supply of oil. Thus, the price has continued trending higher. So this is why this is such a key chart to be watching, because oil has not been getting caught up in some of the head fakes that have been caused by a lot of these conflicting headlines we've seen in the past couple of weeks. Now, despite these volatile and choppy markets that we've seen here over the past couple months, we have still continued to spot some very great trade opportunities and ideas that we've been sharing with our members. And I'm going to go ahead and share with you next a chart of one of these opportunities that we sent out here just recently to the members of our ETA Trade Alert service that actually presented them with a very nice profit opportunity. So let's go ahead and hop into that chart next. So the one I'm sharing with you here today, this is actually for ticker SSO. This is an S&P 500 leveraged ETF. So it's going to be a 2x levered S&P 500 ETF. And so when we started to see the markets confirm the move to the downside, of course, it was a little bit more choppy in February, earlier on, back last month in March. But once we started to see some more confirmation of the move to the downside, midway through March, we started looking for some opportunities specifically with this ETF to go ahead and send out alerts to our members. And the alerts were to purchase puts on SSO in anticipation that the index and the ETF itself were going to continue to trade lower. Now, we actually sent out those put alerts to our members right around here. That was roughly the initial entry point. Again, you can see the trend lines here on our charts head flip to a sell signal. You can see that with our shorter term EMA trading below our longer term EMA. You can see the very clear series of lower lows and lower highs that were developing in the chart here. And of course, all that price action was happening below both those EMAs. So some very significant technical sell signals going on here in our charts. It was continuing to push down to near term lows. And so shortly after we sent out that trade alert to our members to go ahead and purchase puts on SSO, you can see, of course, SSO continued to trade down along with the broader markets. We all know the S&P has been under a lot of pressure here in the past couple of weeks. So of course, this ETF continued to trade to the downside. And this actually presented us several different occasions along the way to go ahead and take some profits and lock in some winning trade opportunities for our members throughout this recent decline. And it was just last week after things started to really sell off sharply to the downside, things started to really get extended and oversold to the downside. That was one of the times we actually took the opportunity to take some additional profits in this SSO position that we sent out to our members. And so following our risk management guidelines, we went ahead and closed out a portion of that position on Friday near the lows of the trading session right here. And those SSO contracts that we closed out on Friday, those resulted in a 107.1% profit opportunity for our members that were able to follow along with that trade alert. So while the overall markets and broader indexes were all in significant declines, with the S&P itself, peak to trough last week, trading down almost 10% from its all-time highs. It was getting very close to entering correction mode. With that as the backdrop, this put option alert that we sent out to our members presented them with the opportunity to actually have an over 100% return in just a few weeks' time. So we were certainly glad that we were able to send out this alert to our members so that they can still continue to find some income opportunities out there in the markets, even while the indexes and a lot of stocks under the surface were continuing to sell off quite sharply. Now, those of you watching this week's weekly market update, I certainly hope that you were able to follow along with that trade alert and participate alongside that trade to the downside for SSO. But if you were not, no worries. I'm going to go ahead and tell you right now how you can ensure that you begin receiving these trade alerts just like the one I shared with you here today. So if you want to make sure that you begin receiving these trade alerts from our ETA Trade Alert service, just like the one here for SSO, this is what you can do right now. Go ahead and reach out to the FFR team. Go ahead and reach out to Michael and his team. And please feel free to ask them any questions you want to about our strategy, about our program, because they're there to help you. They're a great team. They'll be more than happy to answer any of the questions that you have. And most importantly, they can get you signed up and get you on the list to make sure that you begin receiving these ETA Trade Alerts just like the one I shared with you here today. So go ahead and give the team a call. Now, to conclude my weekly market update for this week, a couple of things that we're watching very closely here at the team. Of course, per usual, we're technical analysis traders, we're trend followers here, so we're staying very, very hyper-focused on the trend. Any of the technical trend breakouts or breakdowns, either we're continuing to see on the charts, that's our primary focus and what we're watching most closely. Of course, some of the events in this headline-driven market, we're continuing to watch these events unfold very closely. Certainly tonight's speech from the president could possibly be a major market catalyst, whether to the upside or to the downside, depending on what is shared during that speech. Could be a positive for stocks and could continue to fuel investor sentiment that has led to this relief rally here in the past couple of days. Or if it doesn't deliver exactly what they're looking for, it could actually be the catalyst to continue to push price lower here in this recent series of lower lows and lower highs that we have experienced over the past month. So we're going to be watching that speech very closely. Also, too, in this shortened week of trading, the markets are going to be closed on Friday in observance of Good Friday. But despite that, we are actually getting a major economic report due on Friday. It's going to be, as I mentioned earlier, the non-farm payrolls report. That could end up being an important market catalyst as well. Certainly, the last non-farm payrolls report was much weaker than expected and was painting the picture of a slowing labor market. So the bulls in this market certainly are going to be hoping for a very positive non-farm payrolls report from this one. Because if we get a second consecutive bad jobs report, that could also end up being another catalyst to push stocks to the downside. So those are the major things that our team's keeping a very close eye on here in the week ahead. I want to thank you so much for tuning into this week's weekly market update. I hope you enjoyed watching this. Hope you found this educational and you enjoyed it. So thank you for tuning in. I'll be putting this together for you next week. But until then, hope you have a great rest of your week and weekend, and we'll see you back here soon. Thanks so much.